Hey guys, Zach here to do a review of my 2017 results. Okay guys, so I'm going to start with this, the almighty chart. This is the same thing you see if you go to my profile on eToro and under stats. This is me. So performance. Okay, I'm going to start with March, April, and May. Okay, I start with this because it is kind of interesting. I don't have the stats here. I didn't manage to record it, but I can tell you exactly what happened. I was on the impression that Macron might not win the election, and it's going to be Le Pen. So that was one of my theses right here. So 4 theses on my blog that said that I thought Macron might not win because the French people wanted change, and of course he did win. So the market kind of rallied against me. But what happens? I went short here, and it went all the way down here, and then I was like, oh, okay, my thesis may be correct, and if we're right, we're heading all the way to about $1. So it's gonna look like this. And at that point of time, I felt that if I was wrong, all I would do is head back somewhere to around break even and I'll be fine. So around here, I risked about $900 just for this tiny portion here. And if I was correct, it'll go all the way to here, which is a pretty good return. So I was like, okay, I'm just going to leave it. Of course, what happened was that when Macron won, the market just continued to rally and rally and rally and rally. And here we are today, we're stuck in this range at 120. So it wasn't a bad thing, it's just that because I had bought it at such a good time and it went all the way down, and this was kind of March to April, so my March I made a lot of money because I bought here, and then at the end of the month it was kind of here. So this was about, I made quite a decent amount here. What happened then was I lost it all because Macron won the election, and of course that was, when was that? May. So May would have been around here. Yeah, exactly here, this gigantic gap here. And this is where I lost it. Well, pretty much everything I made. In theory, all I've lost was about $900, but because of the way eToro calculates the timing of this, it looks like a huge drawdown for me in April and May. But really, it was this just kind of cancelled out each other a little bit here. Okay, so then I'm going to start from May. May I entered this trade, which is the GBPUSD, and I was like, oh, okay, I'm not sure how this is going to go, because at that point of time, Theresa May was already announcing Brexit, and I thought, she had the flash elections, and she must have been very confident if she was going to do that. So I had the impression that she knew what was going on, and she was going to consolidate more power. So I expected the pound to rally, and that's why I stole short. That's why I bought back, and kind of lost out on that a bit, which is fine. I think these are kind of small losses. This US dollar Japan trades, I was trying something that didn't really work out, so my bad on that part. Aussie dollar, these 3 trades right here, what happened was I have this thing that I learned this year is I like to bring my trades back to break even as soon as possible. So as soon as I make like 20-30 pips, I will put my stop loss back at break even. Now I've learned that that's not the ideal thing to do, because I got whipsawed a lot. So it went up and then it came back down to my break even point, and then I stopped out and then it continued going. It happened quite a few times in this Aussie dollar trade. That's why you see me getting in and out so many times. And especially this one, I saw it topping out, so I was like, yeah, I'm out. And also, if you look at the position size I was playing for these trades, these were very, very large position size, even these Japanese yen trades. I was trying to scalp in the intraday market, and I think that's just not my strength. And I also think that it cannot be done over the long term. I'll get into that some other video, and I know some of you are actually like technical traders and you trade with 15-minute chart, 5-minute charts. I get it, yeah, 100%. It works, but I don't believe it works over the long term, and I can explain to you in another video why I think that. Okay, so after that, I've learned my lesson and decided, I'm going to go back to the higher time frames. So all these were the ones you saw just now, that one, and all these went back to the higher time frames. Okay. So another thing I had was this sell oil thesis, and the reason I wanted to sell oil was because I did not believe global demand was there. So that's on my thesis here. OPEC thesis. Then what about oil? Yeah. So all these kind of contributed to the fact that I didn't think that there was global demand. What happened was I was trying to trade the OPEC meeting, which I've learned is a terrible idea. I can show you why. Okay, even for us on eToro, what we're looking at is these kind of trades. We're looking at a chart like that. Well, this is all fine and good and can give you the general price direction. What I've learned is that, what is this called? Oil futures. What professionals look at is something more like this. Okay, this gives you I learned how to trade this because I was working for a hedge fund sometime this year. Unfortunately, I couldn't join them, but when I was doing my training, this is what I saw. And trading this is very different from trading this. This allows you to see exactly where demand levels are. So you can see how much demand and supply there is at each contract level. And you can tell momentum just basically by looking at this, and it is incredibly difficult skill to learn. I wish I could show a bit more to you guys, but I can't. So this is the ES, so it's not oil, but yeah, it is very different from trading a chart. So where I went wrong here is I was trying to trade intraday on the oil levels. If I wanted to have a long-term view, which I did, I should have played it a bit longer. Of course, that wouldn't have worked out for me because I was like shorting at $49, $50, and look at it now, it's like 61. I think when Hurricane Harvey and Irma was kind of on the table, that thesis went out the window because a lot of things went a bit haywire in my thesis, and also demand and supply dynamics change. I don't know how many of you know about the Keystone Pipeline. That was also another big one that played into this thesis. And also, I underestimated the power of OPEC. I didn't expect them to have so much influence over the price of oil. I felt that if they, when I was looking at the stats, what they had was restrictions over the price of oil, or the production of oil, but what happened was that people were still overproducing. I don't know how much that played into this price chart, and I mean, to be honest, I don't know enough about oil, and from now on I'm not going to trade oil unless I can do it on this kind of, on these ladders. Okay, so no more oil for me. Okay, so that's a huge lesson for me as well. See how much I lost here. 335, so I think nearly $1,000, and that would account for pretty much this huge drawdown here. $1,000 for me would be about 3%, so all this would kind of go back. Okay, so what happened then was I went to... Okay, one more mistake I need to talk about this year is the big one that I made, this prediction I made in January. I said that the market was overvalued and that it had to come down. So this has to do with the SPX. This SPX. Okay, I said that the market was very overvalued and it had to come down, and this was at the beginning of 2017. I put this over here because when I was looking at the historical trends of the S&P 500, I noticed that this is how much it would move before it came back down. So by that, And also a lot of market analysts and a lot of experts, hedge fund managers were saying that in September sometime this would come down amazingly and spectacularly. So I was buying into a lot of that, and I expected the market to come down. If you look at the fundamental value, Schiller, PE ratio, S&P 500. So this is one of those metrics that we use to measure how valued the market is. So what we do is we take the price of the stock divided by its earnings, and the higher the number is, generally the higher the more expensive the market is and less value there is. Okay, so we look at it just from a 5-year standpoint. Okay, maybe not 5 years. Okay, let's look from 2000, sorry. So we are higher now in the stock market than we were in 2008, 2007, 2008, before the financial crisis, and this was the big one, right? That's why we see this dip here. So not only are we higher, we've never been higher than this since 1920s, and this was the Great Depression, and 2000s, which is the dot-com bubble. So in my mind, there's no way this could have gone any higher. So I made the prediction that this would drop and this would fall hard. Of course, it didn't. And the biggest lesson that I learned is that an overvalued market can get even more overvalued, and it's very dangerous to play a short position on this. Also, because of the fees, it's very expensive to do a short trade on the S&P 500. What I mean by that is fees. So if you were to short the S&P 500, it would cost you, let's see, there we go, minus 0.06 per day. So it was not cheap. I remember when I closed this position, it eventually added up to about $200 or something like that. I can't remember exactly. This is normal. It's it always is very expensive to short the market. Even if you use naked stock options, it's very expensive. If you short ETFs, it's even worse. It's generally expensive to short the market. That's why short sellers have a very hard time. So this is where I lost some money, and it's quite a bit. I didn't expect to lose so much, but I did, and that was really because I tried to short a really overvalued market. I tried to hedge certain positions, like when I saw that the market was likely to head higher because of the fundamental news I saw, I went to sell the VIX. And then here, I think I tried to sell the VIX again. So this was to hedge this SPF, the S&P 500. And when I thought there was a really good opportunity, I want to buy the VIX these two times. And of course, the VIX has just this kind of plummeted. It's right here. Okay, the reason why the VIX is so low, in my opinion, is because there is this short VIX trade. I won't go into it here because it's very technical, it's very long, so if I were to explain it, it'll take a bunch of time. But something you need to see is this. If you go back to February of 29, okay, it was trading at 12,000 thereabouts, and now it's at 26. Oh, it's at 8.21. So it has only gone this direction until here. This there are many reasons for this, and like I said, I think one of the main reasons is the short VIX trade, which a lot of very big funds are into. It's created a very distorted market. What I mean by that is the options are very, very cheap on the S&P 500. Again, it's very technical to go into it, but if you have the ability to buy options, I think an option call spread to the upside is really a very good trade, but that's only if you know what you're doing. So for most of you, if you don't know what an option is, yeah, try not to trade this. Okay, and then we go into, of course, the final months, which for some reason no, nothing was kind of working out for me in this point of time. And ironically, this was when I had my popular investor, kind of my yellow star. So, and when I got my yellow star, suddenly my performance started dropping and dropping and dropping. And then in July, things started picking up for me again. So I made this trade, which is the dollar CHF trade. And what happened here was I bought the Swissy at, let's see if I can show it to you guys on the chart. I bought the Swissy when it was on its way down. You see this? This is too wide, sorry. I bought the Swissy on its way down spectacularly when it was coming down. Let's see. Somewhere around May. So yeah, this spectacular move down. So around here, I was like, oh, I'm quite confident. So I'm gonna go for a long right here because I saw this as a kind of a slight breakout, and I was like, okay, this is gonna go back up. I think it's gonna hit parity, and of course it didn't. So it came down, and then it came back up, and I was like, oh, okay, I'm in the clear. And then it came back down, and I was like, ah. And then I bought again at 96. So horizontal and 98. So I bought here and here. And at this point of time, I was like, oh shucks, what's gonna happen now? So it came back up for me a little bit, and then it dropped all the way down. So if you look at my profile, where is it? It's not here. So let's go back to me. My largest drawdowns, let's see. Okay, they don't show the drawdowns. Okay, but my largest drawdowns would have been because of this trade. And I was trading quite a lot at this point of time. So I was trading this 6,900 plus leverage, and then this 7,500 with leverage. Okay, and what happened was that I had my thesis, which was, you can find it, CHF here and here. So it's my CHF thesis, my Swissy thesis. And my view was that this would have to self-correct, and of course it eventually did. I was a bit nervous when it came back down here the second time. I was like, is this gonna work out for me? And I was a bit scared, but of course everything worked out and came back up. So I sold this position slightly higher because I wanted to switch into the USDCAD position instead of this, and this was really eating up my capital. And 96 was in 96 I sold out about 97 because I wanted to reduce the bear risk. I saw this drop off here and I was like, it's a bit nervous. I was a bit nervous with the amount of leverage that I had, so I sold it out, and then of course it worked out. So I didn't manage to catch this profit, but what I did capture was this instead, dollar CAD. I captured an upside somewhere around here. Okay, so you can see that over here. So after I closed my Swiss franc position, I made some on the CAD, I made more on the CAD, and I am still looking to go long on the CAD. The reason why I want to go long on the CAD is you can read it on my blog. No, you cannot, because it is on Seeking Alpha. Okay, I will put this in the link in the description below, but I'm very proud of this because it's not easy to get published on Seeking Alpha, and I hate writing. For the life of me, I hate writing. I just do it because it's a necessary thing to do. So here. Okay, so, and I'm still looking to long the CAD, so that's kind of an interesting one, which I'm looking forward to. I won't give you my price expectations here, but you can read the article for yourself. So that's very interesting. And of course in December look at that, 14%, and this is really just luck. It's pure luck. Look at that XRP 3,500. It's just luck. Okay, I have a thesis for XRP. So I did a lot of research into the cryptocurrency market, and I have a thesis which you can read on my blog, again at zachz.com, under this XRP. and my thesis, I have listed out the reasons why I think I should go long and all that. But as it is today, to be honest, I am not comfortable at these levels. I am freaking out because I was only expecting maybe at best to... Okay, let's look at eToro instead. That's fine. Yeah, these prices here, cracking and all that. Okay, so the price here is 2.82. So when I made this thesis, I was maybe expecting 1 to 10. So coming back, I was only expecting it maybe to go to 2. In fact, I sold out half my position when it was at 1-ish, slightly lower than this, because I saw all the crypto markets falling simultaneously, and this is towards the end of December, and I thought maybe this is the end of the crypto mania, and this would drop really, really fast. So I sold out half my positions just in case, and I bought back in later about one something about here. And then it just went nuts. So I was only expecting the most of one is to... So my risk was, I bought it somewhere around here. I was expecting to sell out. You can read it from my blog. But it just went berserk. So now when it's here, I'm a bit nervous. I'm not sure how much further this can go, to be honest. I will probably sell out my positions if I see exhaustion. But even today, if you look at the sell-off, at today's sell-off, it was down 10%, or even more, but then it came, now it's stabilized, and it's coming back up. So there's a 1 hour chart. So it was at 3, it dropped like that, but then it recovered, and now we're here. So I don't know. I don't think this is gonna go back down. This is probably just recovering. It's gonna keep going. But right now I'm just riding momentum, and I am looking for a place to get out because, well, I don't think I'll get out fully. I think I'll just get out half. The reasons for that is I believe in XRP. I believe in the Ripple Labs. I believe they have a very good product. But at this point of time, we're probably just in speculation mode. In fact, if you look at things like IOTA, this has also gone from like $1 up to here, $5, and it's come back down. New has yes, all this is just gone crazy. Even Ethereum has gone. So at this point of time, we really are in a crypto mania once again. So Ethereum just hit 1,000 at the time of recording. So we really are in crypto mania, and it's gonna keep going, and I don't know how long more this is gonna go. I know a lot of people look at coin market cap. I personally am not a huge fan of this. Yeah, I have my reasons for this, but yeah, I'm not a huge fan of looking at these, because when you look at things like that, you're always looking at it from a relative value point of view. We don't really need relative value in this for cryptocurrencies. For me, it's more looking at the use-based case. I would never invest more than, say, 2% of my account in any of these, even have access to all, because in these kind of situations, what you are looking for is a private equity kind of return, which is a 1:10. So even if you get like maybe 3 wrong and 2 right, your 2 will make up for the others that you kind of got wrong. And that's the way I look at cryptocurrencies, because a lot of it is still untested. As much as I like Ripple, I also know that there are inside information that it is not as convenient as it seems. It's not as easy as Swift, and I think these are teething problems. It will have to be teething problems. This quota thing is still not figured out. R3 quota thing is not figured out, so waiting for that. Smart contracts yet to be implemented. So right now we're just riding highs right now. I believe we're riding highs right now. I can't tell you for sure. So I'm going to leave it at that, and thanks for listening.